Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar over the last couple of days is attempting to restore its bullish bias as the market is now climbing back towards that top side around 75.90 area. It is assessed though, if you check out the RSI, it's still somewhat weak and therefore from that signal could see the market turn around after the upside challenge overnight rejected the area around 75.90. It is assessed, though, that while the MACD holds to a negative signal and the potential foul to that break of 50 midway point could see the market turn back down towards a target around 74.70, which was the recent low earlier this week, and reassess from there. Looking at the euro, well, the dollar index, first of all, which is currently holding to a modest consolidating pattern, and that fact is that has given the euro one last up step last night, but backed away from that breakdown level of 119.90. It is assessed, if we check out the RSI, that the market is somewhat showing some weak potential. In the fact is that upside attempts will continue to fail while this pattern slowly declines again. And therefore, with the MACD also negative, could see a re-challenge of this level around 118.60. It is assessed, though, that if the euro does potentially slide, then the dollar index can push up to its objective, which is still at 93 figure 10, and therefore could see the euro as it's weighted at 57.6 to the dollar index, that we may take out the 118.60 level and look down towards the 117 region. Keeping in this up channel, dollar yen taken the challenge back to that 111, but not quite clearing, although it is still challenging and not backing away. It could be stops forming above this level around 111 figure 25 and may see a short squeeze before the down test again back to where this support line comes in, which is roughly close to the 110 handle. Nevertheless, the bulls, I don't feel, have the momentum to push higher, so therefore could see a rejection very soon. Looking at sterling, well, it is Super Thursday, and the Bank of England, the market will be looking very close to on their rate decision, because there has been some talk that we could see some hawkish comments, and therefore due to the high inflation, that is the fact that could send the market in a bit of a high volatility, and therefore take the challenge within the bands of 138 to about 140 and a half. As we can see, though, there was a long-legged doji after this dragonfly, and the market is somewhat apprehensive in taking the rise beyond here. And from the mild rejection, the RSI has buckled slightly. If this pattern continues, I'm in favour of seeing a weaker pound, and therefore could see the pullback to about 138 to 139 and reassess from there. That would mean that sterling yen upside potential should be limited around that 155, 25, 75 area, and eventually see a pullback to that 153. Although the pound has been somewhat firm, the weaker yen play has been pushing this market higher, and I feel that's what's really generating dollar yen at the moment. Not a dollar play, but more of a weaker yen play that's pushing this cross currency higher, that is. And looking at the gold pattern, well, over the last few days, it's struggling to get back to that 1,800 handle. I'm in view that the market will take the challenge back to 1,760. Now, a break beneath there, which is in favour due to the lack of the technicals supporting any bullish recovery to 1,720 before profit taking comes back in. An interesting pattern coming through for oil. One is the divergence here is bearish, and also not from the RSI, but also with the MACD. And secondly, we've got a shooting star. So therefore, if we get a break sub 72.05, so a close under from New York would give further indication down towards at 70 with the base hold at 68.5. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the rest of the day.